morning. I'm Pete Najarian. This is The Take for Market Rebellion. It's a Friday on a shortened week, and wow, what a week we've had. It's been absolutely extraordinary, actually. When you look back to Tuesday, we had a monstrous move to the upside. You look to Wednesday, another huge move to the upside. Thursday, a big move started out to the upside, and then we saw the selling pressure. And as a matter of fact, in the final couple of hours, the market's really just absolutely turned over and rolled over, and we gave up whatever gains that we had and actually finished, for the most part, in negative territory. So a really interesting start for what we've been seeing this week, and it flows right into today, where in the pre-markets we had some pressures on the market, and those have consistently held on and actually pushed us even a little bit lower. But before we get to that, let's just talk about the volatility index. And this is something that I don't think enough people really fully understand about. So when we talk about the volatility index, and a lot of people say, well, it's meaningless now. It really doesn't indicate anything. Oh boy, does it ever. It gives us a great idea of what kind of movement to expect given all the circumstances that are piled in right now. What are we looking for and what kind of an expected move? And it's amazing how much it's actually been extremely accurate of late. I mean, it's been something really impressive, quite honestly, I think. So here we are once again. Yesterday trading around 28, 29 in terms of the volatility index. When you look at the lows to the highs, the intraday moves and everything else, I'd say that's a pretty accurate level where it is right now, because essentially it's saying it's not going to be quite a 2% move, but something sort of close to 2%, because at 32, that would be indicating about a 2% move daily on the S&P. So we're talking about something a little bit less than 2%, and that seems to be about exactly where we are right now. And I think you have to put into that calculation also all the backdrop of all the different things that are going on right now that certainly have been impacting the markets and still have some very serious implications and can influence the market as well. So I think it's really, really important. By the way, we have had volume days. This week has been absolutely on fire. We started off Tuesday with about 29 million, a little over 29 million. Wednesday, about 31.5 million contracts trading in the derivatives markets. That's why we're here, guys. And yesterday, about 29.5 million contracts once again. So we are sitting in a great spot right now in terms of the volume, the participation. Some of it could be some hedging, but there's a lot of different things going on right now, and we are certainly seeing unbelievable numbers when we're talking about the derivatives markets, and you look at those year-to-date averages as well. It's just a really, really powerful year so far in terms of volumes just absolutely being participating. And every once in a while, we've seen a little bit of a fade, but those fades, as I've mentioned many, many times recently, those fades really fade back off of where we are now, but they'd be record pace in any other year. So it gives you an idea of just how strong and powerful this really is. Now, do you ever get just sick and tired of hearing all the cliches, all the BS that you hear from everybody out there when you're hearing about sell in May and go away and all this other crap? You know, you don't want to miss out on the marketplace. So I've always viewed those as silly cliche things that people just throw out there. And I hear a lot of traders bring it up, and it's ridiculous, because even if May were a sell and go away, there's all kinds of trade in between. By the way, it wasn't a May, let's sell and go away kind of a thing this go around either. By the way, here's some of the gains, and monster gains. Matter of fact, you look at the Dow itself, up about 2,000 points in the month of May. So you'd have missed out on that had you sold and gone away. I'm looking, and I'm going to give you some of the different categories of where we're seeing some of the great participation. So tech. We all know tech. Everybody always talks about it all the time, the Power 5. So let's just put that into one bucket. So tech, I'm going to use the XLK. And so it went from 89 to 97. That's a pretty nice run to the upside. I don't hear enough talk about biotech. I try to bring it up each and every day, because every time somebody wants to bring up NASDAQ, what's driving the NASDAQ? Oh, it's the Big Five. Yeah, the Big Five definitely has its huge influence. But how about looking at some of the biotechs? That's also been a big, huge thing. Look at the XBI. Also was at 89, actually up to 103. So that gives you a little idea of it's actually been stronger even than the big and the Power 5. Nice move to the upside. Healthcare has gone from 97 to 103. Much smaller move, but still a nice move to the upside. Industrials have gone from 62 to 67 with the XLI. Again, a nice move. Not huge, but a nice move to the upside. And so that's why when I hear all these craziness of sell in May and go away, you know, there's been many people out there have talked about this over the years, that if you miss and you decide you're not going to be a part of it, a specific number of days of the year is where all your gains are going to be made. So always keep that kind of thing in mind. It's why we're here every day. We talk about discipline all the time. We're disciplined. We try to be in front of not only our computers right before the opening, but before and after, throughout the day, and trying to be on top of things as much as possible, just trying to read as much as we can and try to figure out the markets, just like the old days of standing on the trading floors of the Chicago Board Options Exchange. It's an unbelievable place. Matter of fact, I had a little bit of a debate with a guy last night. We were on CNBC Fast Money, and we didn't really debate this, but comparing what we're seeing now to what we were seeing in 1999 in terms of just the markets. Now, the craziness of that to me is the multiples were nothing close. Those were extreme back in the 1999 era as compared to today. Whether you want to talk about individual names, you want to talk about S&P, wherever you want to go, it's not really a comparable situation. And to me, it just, again, is an idea that, people I think are looking for a lot of flash sometimes. And that's part of what I think we see sometimes. Now, Tony Dwyer has been absolutely fantastic. Tony's a good friend. He's been a part of Market Rebellion on these round tables. He's done a fantastic job. He's been a wonderful guy to be around. And he just brings what I think is a very common man approach, which is exactly what I do. I do boots on the ground all the time and all this kind of thing. Tony does the same type of thing. He was getting a lumber delivery this past Tuesday, as a matter of fact, to let you know what a boots on the ground kind of a guy Tony really is. So he's a great guy, and he was talking about banks and tanks. And I like it. They always like to get something kind of clever when they do it. And banks and tanks, it really does work out well, because he was saying how you're looking at this rotation. Everybody's been talking about rotation. And I've always viewed it as a very healthy thing. We talk about it all the time. So where are we seeing some of that rotation? Well, a day by day, we see a little bit different. Some days we see the semiconductors leading. Some days it's the technology. Some days it's going to be the biotech, industrials, could be financials. Had a couple days this past week where it was the financials leading the upside. A nice big almost breakout for the financials earlier this week, where we had a couple of nice back-to-back days where we'd seen great participation from that. So we continue to see this rotation, which I think is really important. Now, I talk about headlines all the time and how headlines can be an influence. We talk about the background of, we were talking about volatility. Well, we've got China trade tensions on board today, so that's one. Throw in the president going with these flare-ups with social media, that's another. So there's all kinds of things going on. Oh, how about China and what's going on with Hong Kong? There are so many different news stories out there, folks, that can have an influence. And even if they haven't absolutely executed on specific things, those are things that you have to be considering as you're looking and viewing the markets themselves. So that's something we pride ourselves on, that we're trying to factor in all of these various things when we're trying to analyze these markets. So in the first hour today, markets are down. They're not down huge, but they're definitely down. I'm looking at the Dow down about almost 0.75% right now. NASDAQ barely down at all. And the S&P down about 0.5%. So volatility, what do you expect to see out of that? A little bit of a rise in volatility. It's exactly what we're seeing. Volatility's gotten a lot closer again towards that 30 number. So that's something that we'll all be keeping track of, but a pretty good pressuring move. When I said the Dow's down about 0.75%, it's down 190 points right now, exactly 0.75%. So that's something. Oil down just a little bit, but oil's had that huge run. We've talked about it over the last month or so, and we've seen that prices go from 17 to 35. Here we are trading around 33, so holding on, but down a little bit today. Gold has been all over the place, but gold had that big run up to 1750. It pulled back and then actually did not hold at 1700, but that only lasted a day or so. And here we are once again trading around 1730. It's up about 1% today. So a nice move there. I mentioned volatility trading around 30. So where are we seeing some of the leadership today? Well, the leadership is leading a market a little bit lower, is in a lot of the names. We talk about rotation. A lot of those names, defense names, industrial names, kind of this time around, I'm sort of putting that in that tanks sort of the bucket of the banks and tanks. So the banks are off a little bit, but I'm looking at Boeing down about 2.5%. I'm looking at Raytheon down about 2%, Caterpillar about 2%, 3M's down about $2 or a little over 1% itself. We had earnings last night from Salesforce. Salesforce has had a pretty nice move to the upside. Disappointed on their guidance. Stock down about 4.5% today. Airlines are getting pushed down today. So We've had the areas that have moved extremely fast to the upside. They're giving back a little bit right now, not huge, but a little bit right now. We're not even talking about a 1% move yet. It's early. We are literally in the first hour of trading so far. By the way, volumes have been strong once again to start off Friday. So we talked about Tuesday and Wednesday being very strong. Obviously, Memorial Day, we were not open. Thursday, again, really, really strong. Looks like we're starting out strong right now as we get a little bit closer and closer to the weekend, once again, being a Friday. So where are we seeing some of the unusual option activity today? Well, Nutanix. This is a name that I barely knew this name a couple of weeks ago. This hit for unusual option activity and absolutely exploded the upside. Well, doesn't mean it's going to happen twice, but it certainly could. This is a name that just continues to want to power to the upside, powering to the upside today, even despite the fact that the markets have some pretty decent pressure on them right now. So we see 18,000 of next Friday's expiring, June 5th, because believe it or not, folks, we're just about done. June 5th, the 25 strike calls are going for about 80 or 90 cents right now. They started out much lower. The stock started to move to the upside. That buying kind of continued to come in, and the stock started to move to the upside. Stock was about 23 during this whole buying frenzy that we see here, but 18,000, that's a pretty big number. So grabbed my attention, and of all the unusual so far today, I thought that was the most interesting one so far. That's a name that we had unusual before, had a great move, sold out of it. I'm looking at these, couldn't help it. I am in these. So full disclosure, I bought these options as well just a couple of minutes ago, just 10 feet away. But folks, have a great day of trading. Educate yourself. Understand the derivatives world. It is a growth area. I'm talking about these volumes for a reason. This is an area in the marketplace that this has been consistent. This isn't just a pandemic thing. This has been a consistent growth area in the markets. We had a record year in 18, followed it up with a very close to record year once again in 19. And then you look at what's going on right now, an absolute explosive year in terms of volumes. And it's been building and building and building. And it's where people can get leverage. And it's a spot where you can reduce risk in many cases. Now, obviously, you have to be educated. You have to understand how you're going to be able to do that. We have some of the very best in the business at Market Rebellion. Get educated. Folks, have a great weekend. Have a safe weekend, and we'll see you on Monday.